There's many things we need to push for, but I've already taken a lot of your time, so thank you very much.
Thank you.
Mark O'Byrne is here from Cllr, and we promised him a couple of minutes to just tell us why he does what he does. It's part of the whole reform that needs to be encountered by people and understood and benefited from. So I'm sorry we cut you out of it earlier on.
It's fascinating, absolutely fascinating.
Please.
I've been in the business for 13 years of finance, economics, money, and I have to say it's one of the best presentations I've ever seen, and I'm looking forward to seeing it on the video and even in the PowerPoint. It was a tour de force, you know. So, and congratulations to the PBFI for bringing Richard over here. I think it's a real coup, and I hope he's on the 6 o'clock news and prime time, because he deserves that platform for what he shared with us today. It was really, really powerful. Why do I do? It's my background is history. I actually studied economic and monetary history, and when you study history, you realise the cyclical nature of all these things and the boom and bust nature of these things, particularly in the last 100 years since 1913, and I suppose the Federal Reserve came about, and that centralisation of power that Richard's alluded to, that's been ongoing for the last 103 years, you know. And so that's the history, but it's also today in modern history and the present paradigm that confronts us in terms of the global monetary and financial system. It is, I think, it's amazing just the people who shared in the room here. I think the level of knowledge in this room is far higher than in the general public, and it's because of, I suppose, the lack of coverage, the lack of education, so many reasons for it. But I think if you guys can capture what's in this room and not just there and grow it, I think you have the kernel of something here, you know. I support the public our public banking model. I think it's absolutely vital. I do think the current monetary system, it's a Ponzi, it's a casino, we all know that. It is going to collapse, the question is when. And these public banks are going to be absolutely vital in terms of SMEs, as Richard alluded to, because they are the backbone of our economy. So what we do is, one of the phrases that was used was taking power back from central banks. What I do is we sell gold coins, gold bars, not to make money, not for speculation, but for wealth preservation purposes. It's about diversification. And by owning gold, you are taking power back from banks and from central banks. And that's the value of gold. It is, just in recent years, a huge amount of academic research shows that gold is what's called a safe haven asset. It's actually safe haven money. It's a form of money that has protected people throughout history and will protect people in the coming years. But so yeah, what we do is it's coins and bars, and Richard alluded to the whole importance of when you own a deposit at the bank, people don't realise that you are an unsecured creditor of that bank. We allow people to take delivery of coins and bars, so we'll ship it to your house by FedEx or on post or wherever you want it, so you can take delivery of it. That doesn't suit everybody. And then if you do want to own it, you have to own it what's called allocated and segregated. And that means that you alluded to the bailor and the bailment law is vital. You have to have outright legal ownership of your gold. And that way you have no counterparty exposure risk to my company or anybody else, you know. So that's a vital thing when it comes to owning gold. So to conclude, I'd just like to thank you for the opportunity just to talk to you very briefly. I know people are already getting hungry at this stage, I won't keep you much longer, but it was absolutely a wonderful event, and thank you again.
I'm sold on the idea of public banks, and I don't need a persuasion on it, but after 3 years where this has been going on in Ireland, I kind of feel it's time that we should be getting down to the practicalities of doing something. And you've already I had some questions about how you're getting on in the UK with getting your own off the ground, and you actually answered my questions there, really. But then at the end, are we mad to be setting up a public bank if you tell us now that the ECB is actually trying to close us down? Anyway, that's mainly it.
Yeah. Well, thank you very much for this question. I think it's the forward strategy, to move ahead in order to face this problem. The alternative would be not to create community banks and just let them do what they're doing. They're killing community banks. I think it just underlines the urgency. We need to quickly set up community banks now, so that we can then also lobby the politicians in those countries, Ireland, England, to help community banks. This is, I believe, also why we are getting a lot of support from Germany, from the Sparkassen and the Cooperative Banks Association. They are under enormous pressure. They find it very hard even to reach the German public about this. This is the trouble with banks. No bank can come out to its customers and say, oh, we're worried, we might get into trouble. It's very hard for a bank to do that because it's based on credibility and trust. And of course, they're currently not in trouble because of their past lending and things they've done. No, it is the regulatory environment and the central bank policy. I'm always encouraging them to do that and come out more, because everyone in Germany has an account with, well, most people I think with both Sparkassen and the Volksbank, Raiffeisen Bank. They could mobilize the whole country. It's not happening. This also shows that when organizations, their association, of course, is a very large group, and when things get so large, you have things happening and influential people at the top, influence people and so on. But people on the ground and sort of middle management are supporting us a lot, and the idea there is, if we can create them in the UK and hopefully also in Ireland, then in these international negotiations that are taking place in Brussels, where so far the German and Austrian community banks and the representatives, they're just being told, oh, you just want some special treatment, always your special treatment for these banks. No, we can't do that. But if there's other countries that also join in and say, no, we have them too, one needs to treat small-scale banks differently. They're very beneficial. They don't need these huge regulatory burdens that a £2,000 billion balance sheet bank with 200,000 staff has. Why have the same regulations for a 20 staff local bank? Then one can change things, and then also it would be easier for them even to address the German public. I found that it's a good way for them to talk about this topic, even in Germany, when you say, well, look, it's being introduced in the UK. Why? Because there are good reasons to introduce this, and we have to help them. But actually, currently, the ECB is not helping. So I think it's the only way is to go forward, but perhaps it just emphasizes the urgency. We need to do it quickly, and we need to, as you also say, get practical now. We need to talk about how exactly can we do it, and the recommendation I have here is to get the local authorities involved, particularly their financial officers, chief financial officers. They need to be convinced first. There needs to be a sound plan, and we're happy to help and share our blueprint. There's always been the idea. There's a blueprint we've worked out, and this should be then spread and copied and imitated. But once you've got the financial officers, chief financial officers of a county council or city council, local authority or several, they can go ahead, because the amounts are not that large. The amounts needed for a county council to make 15 million available is not such a big deal. If you can convince them that it is a sensible investment, and you can show that.
Does it not run a political? Is there not a risk of political interference? That has been the concern amongst our members, that the local authorities, within the local authorities, maybe a party or what would be trying to direct credit. Does your legal structure protect against that?
Do you mean the sort of political interference by a local politician trying to influence the lending and so on? Yes, yeah. And of course that's been a concern that when one discusses this model of community banks, has always been raised. It's about the corporate governance of the community bank. It needs to be designed to be very robust, so it can't be taken over by anyone, and there can't be political interference. We think with this structure, it's very well balanced. So the bank is run by community bankers, and we're getting training in Germany, and we'll try to set up a training scheme to train more of the community bankers. And essentially there's a holding company that owns these shares, and this is where there's 50% ownership of the charity, where you shouldn't get the politicians, but the local community well represented in this charity. And you'd have the local authorities with the other 50%, but they will get representation on the holding, but not in the bank. And then the bank itself will have the following corporate governance scheme. They've been doing this in Germany for a while. So when you have a small community bank, you won't have many directors. And most in Germany have 2 directors. And one is the director for basically front office, customer facing, markets, and the other one is director back office. And when there's a loan application, and they have people underneath them, and departments underneath them, but it's basically this division. Both sides of the bank have to independently agree on a loan. Because it's quite natural for the loan officer, and at the top the director in charge of the customer-facing side of the bank, it's very natural for them to be closer to the customers and, oh, this is a great company, and yeah, we should support this guy, and so on, be much more enthusiastic. But they alone cannot make the decision. So the other side of the bank, they don't spend time with the customers. They may never meet the customer. They may know them, of course, but they're supposed to follow the procedure of only looking at the information, is there collateral, is sound banking, and also calculate what the interest rate should be and so on. And they have to agree. And if they can't agree, that's it. There won't be a loan. And that system seems to have worked quite well in Germany. So, but you're right, one needs to have the right design so that there's only arm's length involvement of local authorities.
Richard, I have a question. Diarmuid, in 1 second. If people are asking questions, if they wouldn't mind coming over here and just queue up, it's the best thing to do. Richard, the question I have, something that you said there was quite distressing, and it bears out my experience in Europe. I'm dealing in Europe for 25 years exactly since I started trying to get things done. And I've seen, the global corporations everywhere. I've seen there's a takeover. And you now have alarmed me by saying what's happening to the public banks in Germany. And the question I'm leading to is, I understand this, I agree with you, and now it turns out it's happening to public banks as well. Where should we be on Europe? Where should Britain be on Europe and Brexit? In the context of what's going on with all this globalization?
Yeah. Well, I'm very much a fan of Europe, and that's why I would advise any country to exit the EU. The project has clearly been taken too far. There was a stage where I think everyone was really supporting it, but we've gone beyond that, and I think it's increasingly clear that it's mainly for the benefit of large corporations, and it's about control, centralisation of power, which has been extraordinary. And from the beginning, it's not been democratic. Now it's told us, well, there will be more democracy, but there isn't any. There is the so-called European Parliament, but they cannot propose a single law. They don't have the right to propose a law. So it's not a parliament. In fact, there's a Russian author who's of course is familiar with the Soviet Union, and he wrote about Brussels being it's a carbon copy of the Soviet system. Politburo is the commission with the commissars, as they are called in German, actually commissars, and they have the power. And the Soviet Union had a parliament, but it's a complete rubber stamp institution. That's exactly the European Parliament. They can only rubber stamp. They can slightly delay, and they can have debates, but they can't prevent, and they cannot even propose a single law. And then if you go into the history of this, you realize that actually from the beginning it had very different, very devious goals. It's a matter of public record now that the origin of the European Union is this project to create the United States of Europe with centralized control and not on a democratic basis. And you'll get lots of material online that various academics have written about this, and soon you'll get all the stuff about CIA this and CIA that. So this is not the people's Europe, is it? I mean, this is not what people want, and I think this is getting clear all across Europe. But just looking at the economics, I think most would agree, yes, we can have a free trade area, but what is the logic in, for example, having even a single currency? That never made any economic sense. And that was clear already when the euro was supposed to be introduced. At the time, I was chief economist of a British investment bank in Tokyo. So looking at it from Tokyo and on my visits to Europe, I would be amazed that people would go along with this, introducing the euro, which doesn't make any economic sense. There is no economic justification for this, for any country. It just did not make any sense. And then if you debate with people, they would say, oh yes, you're right, okay, it doesn't make economic sense. It's my fellow chief economist of European banks. True, oh, but it's a political project. It's for political reasons we're doing this, because we want unification. We want, united Europe. Well, are the political reasons convincing? You go through them and you realize, well, that's not convincing either. So it just never made sense. And that was before all these disasters that we've had. The various Eurozone crises and the EU immigration policies and all these things, So I hope people will be sensible enough in Britain to vote for exit. Whether they actually get the exit is not clear, because we know what happens if you vote the wrong way, right? So the likely thing that's going to happen is there will be various big, discussions, negotiations. Then they'll say, oh well, we better have another referendum, because people are a bit confused about things. And so in 2 years' time, we have to wait for the next referendum.
Right, Diarmuid O Flynn is going to have a question. Diarmuid works with Ludwig Flanagan and Brussels.
Oh, you're Richard. Okay. Speaking to this.
Sorry, I should say Diarmuid is the main man behind the Ballyhay Says No group, which has been a tremendous group, a tremendous inspiration to us all. They marched, I think, 250 times.
Oh, we marched every Sunday for 5 years. It was, but, it's actually related to that. Just a couple of things, Richard. First of all, I know you probably know this already, but when people speak about GDP in reference to Ireland, our GDP is completely distorted here by the multinationals. So, like the figures that are quoted don't apply to Ireland. It would probably be GNP or GNI. But what I wanted to ask you about, and I'm pretty sure you probably don't know about this, but most people speak about the bank debt in Ireland in historical terms, as if we have put 69, it's actually 69.7 billion, not 64, 69.7 billion into our banks, as though that's money gone under the bridge, but it's actually still ongoing. And the promissory note element, which was, the bailout of Anglo-Irish and Irish Nationwide that took place in 2010, using promissory notes, which was basically a note written by the Minister for Finance then, backing those two banks, which were already insolvent at the time. But those notes are 31 billion euro, and they are not historic. And just so people here know, and I don't know how many people actually do know, but in 2014, we destroyed, this country, our central bank destroyed 1 billion euro of borrowed money on the basis of those notes. And last year, the central bank destroyed 2,000 million euro on the basis of those notes. And the central bank is still holding, and this is all confirmed, over 20 billion euro on the basis of those notes. So the question I want to ask you is this: like when we've gone to the ECB, that Ballyhay Says No group, we've been over in the uppermost corridors of the Council and the Commission and the Parliament, and we've met so many different people over there. But whenever we've spoken to them about these notes and the fact that they're still happening, We meet great reception and lots of sympathy from the people in the corridors over there, not so much here, but and they basically tell us that their hands are tied. And when you mentioned there that, you know, back when all this happened, that the ECB could have just created what we did here with the NAMA, you know, created a bad bank and taken over, which would have been the logical thing to do, the bad debts and, you know, all these debts of Ireland and Greece and everything else. What they're saying to us is that they couldn't do it because they quote Article 123, monetary financing, you know, and that this is what it would have amounted to, and that they couldn't have done it. So what I'd like to ask you is just on that, could it have been done? And the second question, going back to what you were talking about, because I've read a lot into the formation of the euro and everything else, but do you think when it was launched, it was a flawed concept when it was launched? I mean, you know, it didn't have the architecture to support all the problems that happened later. And when it was actually being designed, all that architecture was in there, and all those structural columns and beams were already built into it. But the member states, like Ireland, like Greece and everything, said, no, we don't want those because we'll lose financial autonomy. And they launched it anyway. And I'm wondering now at this stage, because the architects of it were mostly German and French, that if they decided, okay, we're going to launch it, we'll let this all happen. Because we know who's going to suffer. It won't be Germany. And we'll let you all suffer. And now what has happened in the last 4 or 5 years is all those elements that were taken out in, you know, full economic monetary union are now being put in almost without objection, almost without discussion. So I'm wondering if the whole collapse even was foreseen and deliberately allowed to happen by, not the ECB because they weren't there at the time, but by the people who designed the euro. Two big questions here, Richard.
Yeah, thank you very much. On this question, whether they've done this by design, one would have to do detailed research to give a proper answer, basically. So I shouldn't give an off-the-cuff comment. But when you research into the origins of the EU, as I said earlier, I mean, you find that there were long-term plans there, and it wasn't exactly what was sort of marketed to all of us. So there's always been this gap between what the decision makers behind the scenes had in mind and what was really publicized. One of the key movers and shakers in creating the structure was somebody called Jean Monnet, and I believe buildings and streets are named after him in Brussels, and, you know, he's the father of Europe, apparently, we're told. And it was always interesting that he was clearly the mover and shaker in putting together these deals, and he had the strategy. He wrote some books, which nobody seems to have read, because they say things like, oh, we have to do this cleverly. You know, we can't tell the people what we want to achieve, the United States of Europe. We have to do this step by step in very boring steps, you know, the steel, whatever, treaty and so on, and, you know, very technical stuff, but each time we take more and more sovereignty. And so who was this guy? Who was he? Well, some data was released around, well, in the 2000s that had been classified previously, and so some academics have done some research on this. I believe there's only one newspaper in the world that actually reported on this in the UK, and even there one of the articles has been pulled now on the online version, but it turned out that this Jean Monnet was a CIA agent. You know, that's a matter of public record apparently. And this European movement, which went round to all the countries in Europe and all the parties, government and opposition, they handed out cash. They would speak to the party leader and say, look, we love Europe, we believe in Europe, we want, you know, peace and, you know, apple pie, and we'll have, you know, wonderful united Europe. Can you put this into your party program, that we have that? That's also your party's goals, and we'll give you cash to support this idea. So basically all the parties took the money and thought, okay, these loonies, you know, we'll put it in, nice idea, it's never going to happen. And this is how it got into all the political parties in Europe. And this is how they operate. Now again, the same data seems to show that this European movement, that's what it was called, European movement, was CIA money, CIA funded, and the European youth movement, 100% CIA funded, staging all these student protests and whatever. So, there are things in the background. The idea has from the beginning been to create a totalitarian control system, and that's not our Europe. So that's my answer to that question. Can you just remind me of the first one? I think.
Monetary financing.
Yes, yeah. Of course, that's the usual excuse when central bankers don't want to do something. They will quote all sorts of rules why they can't do it. For 20 years, the Bank of Japan has been saying, "Oh, we can't do X, Y, Z because." But when they want to do something, then they just do it. And the ECB is not held accountable to anyone, so it can change its interpretation of the rules any way it wants. Because, as we know, under Draghi, a lot of monetary finance has taken place, and bonds and securities of countries such as Greece and Italy and Spain have been bought on large scale. So it is just, don't call it monetary financing, call it something else. It just shows the excessive discretion they have in interpreting the rules, because there's no outside body that could hold them to account.
Any more questions then? This man here?
Yeah. Hi, Richard. Thank you very much for your presentation. It's this whole area. It's a big black hole of mystery for us, and most of the world is woefully misinformed, as we can see from top to bottom. And it's really good to have you here to shine some light on it. So my question is mostly aimed to you as an economist, rather than you're an economist, but you're also the founder of a bank as well. So, speaking as an economist, I want to ask you about interest, which is a big bugbear of mine. Looking at what you were saying even today, that interest doesn't even work as an instrument of any kind of macroeconomic policy, and when it is attempted to be used, it usually does the opposite to what is being attempted. And given also that the charging of interest really only seems to facilitate the leaking of wealth from the people to the likes of Goldman Sachs on an ever-increasing basis. And in Ireland we can give the examples of that, of how much of every bit of money and tax that's coming in is going straight off to them now, and really hobbling any chance we have of a real recovery here. So given all those things, as an economist, would you possibly agree that maybe there's just no point for the charging of interest at all, and that as an economist we might perhaps be better off with a money system where interest is not being charged?
Thank you very much, and I'm glad you asked that question. In economics, there's 8 very clever reasons why we have to have interest rates. And one of them is the fact, is the claim that interest rates are needed as monetary policy tool. Interest rates clear the financial markets, supply and demand. And the other one is, and we've seen that that's not the case. The other major one of these 8 is opportunity cost. So if you're the lender and you're lending somebody money, well, you have to give up something, you should be compensated for that. And this is based on the idea that banks lend money. And lending means, okay, I've got this glass of water here and I'm lending it to you. When you have it, I can't also use it. I'm giving something up. But as we saw, this is not what banks are doing. Banks are not lending money. Therefore, the opportunity cost argument does not apply to banks. They're not giving up anything. In fact, if you go through all these 8, you find that once you take account of the reality of what banks are and how they actually function, then none of them apply. There is no justification for the charging of interest. So what is interest? It's merely a fee. It's merely a transfer, what economists call a transfer payment. It is a transfer from the many to the few. And it is a clever system, and a lot of resources have been spent over the last 300 years to create the PR to justify the system. Much of the economics profession has been contributing to that, knowingly or not knowingly. But actually, it is just a way of getting money from the many. Therefore, it's possible to design a system without charging interest, because, as you actually said earlier, we are the money. I entirely agree with that, and we shouldn't let some financial intermediary get in there, between us and charge a fee for what? So we can design alternative systems, and looking at the alternatives, I've concluded that, because there's also the political reality, and this is where I have to also speak as somebody who's trying to do something and found a bank, or or help create alternatives. When you start talking about this, there will be more resistance, and also if you want to get politicians and local authorities on board, then I think at least initially it's probably, you're going to create more opposition and you get less support if from the beginning you say, well, we want a new monetary system entirely without interest. But once you have community banks, you can already ensure that interest rates are very low. There are then, there is a bit of a transfer payment, but it's used in the right way for the benefit of the community, in a transparent way, in a way that people can agree. So that's already an advantage. But then, as a next step, once you have a lot of community banks, you can then also take the next steps of looking into how you need to change the system then to entirely get rid of interest and see whether that's possible. Then you're already more or less in charge, so you can then redesign the financial system. So I think the important step is the first one, and it's precisely because one is using the existing structures, the existing banking regulation, the existing design of how banks work, but in a different way. But because it's within the current rules of the game, it should be possible to do it. Currently the way it's done is they can't really prevent us from doing this if we play our cards right. With anything else, I think there will be much more resistance and much less support. So that's been my take on this.
Thank you, Brian, Dolan. Thank you, Richard, for lucid and logical deconstruction of the banking industry. Question is, what difficulties or obstacles did you encounter when you were setting up your holding company? Or would you have a recommendation for a holding company to provide transparency and certainty, and maybe some level of certainty that should somebody wish to invest in the holding company for the provision of public banking, what are the steps, what are the important, what are the kind of critical to quality points that you would imagine?
Well, basically, as we thought about the issues we discussed earlier, how to create a robust structure, corporate governance where the different interests are nicely balanced. You need some money. We thought, of course, the alternative is the cooperative model where you get all the money from people in small amounts. There's also a possibility, but I figured that it's more time consuming. You need much more time spent on educating people. So it's faster to do this if you get local public money to start, but then make an arrangement so that you still have the local community to a large extent in charge and benefiting from this. So we found that all the stakeholders from the beginning were very much in agreement that it should be some kind of balance. And the local authorities didn't want to dominate the bank. And they also realized, they don't want this to be, on the other hand, their liability. They don't want to be seen as running a bank, because likewise they fear, well, this could be, politically sensitive or whatever. It could create problems in the future. So we actually didn't have many problems in setting up this structure. Very early on, people were quite happy about this balance of doing it. In terms of the details, we have, if you're interested in our structure, and also if you're interested in investing, we can talk. We have, as we said, we're now raising the other £8 million, and we're talking to foundations and companies. Of course, we're careful. We're looking at the ones that could fit into the picture. But also ordinary investors, but we're sort of going for bigger amounts. I think the smallest investment is £100,000 so far. The other thing I can say is that basically we have a business plan for the coming 10 years, reasonably conservative, and according to that we should be able to pay a dividend after year 3 of around 5%. Given the current environment, this may change, but currently that's the outlook.
Richard, very much appreciate your talk. How much do you think the TTIP and TTP negotiations is related to the centralisation of power? That's one. 2, do you think that we should consider not having a monoculture of currency in terms of bank debt, that we do something like the Weir in Switzerland, where you have different, like the banks, where businesses could get together and create their own credit system? And 3 is changing our definition of either GDP or non-GDP productivity to understanding and creating society prosperity, because the economy came from the home, and I could have huge productivity, but if my whole family are sick, fat, and depressed, it makes no difference. So GDP or non-GDP productivity is not a measure. So it's really a shift in consciousness, global consciousness in general. So there are the 3 questions.
Yeah, thank you very much. So on the TTIP and TTP, well, I think the whole process is something that we should not agree with, because it's all in secret, as you know, in secrecy. It's not a democratic process, and from what we can tell, it's a corporate takeover where large companies can then sue governments, as they have already done in Latin America, and it's not really in line with democratic principles. It's surprising that there hasn't been more resistance against this, and of course that's why they've kept it as much secret as possible, because it's really not justifiable. So that's that. On VIA and alternative trading platforms and structures, there's also the cryptocurrencies and Bitcoin. VIA is something that's been quite successful in Switzerland since the 1930s, and it's essentially a system of mutual trade credit. One can start these systems any time, because our money that we have, which is bank money, itself has no legal status. It is just private company credit. That's all it is. And it has, therefore, legally no superiority over, if we set up our own private company credit system. However, in practice, of course, the banking system has some major advantages. Number 1, taxes have to be paid in bank money. And I'm sure that will be true in Ireland. I haven't checked, but in Germany and the UK, you're not allowed to pay taxes in legal tender. You're not allowed to. You have to pay in private company credit of banks. So of course that basically means the banking system has a government privilege that justifies it. So that's something one should legally challenge, indeed. But in principle, setting up alternative credit systems, because that's all really the banking system is itself, something one should pursue. Again, it becomes a question of strategy and how to make an impact in a short time period. But it has worked in Switzerland for thousands of companies, so it's definitely worthwhile also going along that route, perhaps in parallel with the community banking route, because it's very, very complementary to have that. And what was the third one? Remind me.
Going from non-GDP
Absolutely.
to society prosperity.
I entirely agree. Of course, as an economist, there's various levels of debate, and initially you have to use the existing concepts to get the conversation going. But I did mention that GDP is really a fiction. What matters is, as you say, it's people's well-being, quality of life, and these things, and that's how it should be measured. And again, we can design standards like this, because why don't we have alternative measures as targets, a policy? Again, it's the power of the banking lobby. I believe the current definition of GDP was designed by the bankers for the bankers, because they're mainly interested in this GDP, the way it's defined, because it's a sort of measure of the ability to service debt. So it helps them gauge how much a country should receive in funding still, or whether it's too much, because it's sort of the ability to service debt. That's why they only want market transactions in there and all that. Because ultimately they only care about, well, can they pay our debt? Can they pay the interest on the bonds and redeem the bonds and things like that. But again, it shouldn't be the main target. But to tackle that, we need to tackle the big banks, which is influential. So, it's back to how do we tackle them? And again, I think setting up community banks is the way forward, and of course also alternative credit schemes. Thank you.
John Ritton. Yeah, John Ritton. I'm involved in credit unions, and considering where we've got to in Ireland now, it's hard to know whether it's easier to believe it's a conspiracy or incompetence. You mentioned the sale of ACC to Danske and ICC to Bank of Scotland, the total destruction of the housing finance system, which was an independent mutual housing finance system, and now the power totally in the hands of the banks. And what the central bank is now trying to do to credit unions, you talk about the rationalisation of the community banks in Germany moving down from 1600 to whatever, the intended consolidation in Ireland is intended to be much greater. The 400 odd credit unions are intended to be 10, according to the last governor of the central bank, which would be a scandalous situation. And it's interesting to see whether it is conspiracy or incompetence. It's hard to know. But I think that if a community bank is going to happen, the enemy is the central bank. The power of the central bank, the Irish central bank, the Department of Finance will do nothing unless it's approved by the central bank. It's absolutely incredible, the concentration of power, unaccountable power that's in the central bank. And if you want to create some kind of a community bank or whatever, the one thing you cannot do is put yourself in the position where you're going to be dependent on them for their consent to be able to do it. Because if you're going to be dependent on their consent, a license or anything else like that, it will not happen, because they will block you all of the way. So you may have to not use the word bank. You may have to consider, not allowing yourself to be pulled into the trap. Call yourself a community financing organization. Think about how you can approach it and structure it in such a way that you're not dependent on them. And because every single hurdle that will be put in your way by government and by bureaucracy will be there. And you have to design your way around them, like I think you have done in Hampshire. And I think that local authorities in Ireland are very different to what they are in the UK. They have much less power, and it's very different. Okay? Thanks for coming.
Appreciate that.
If people have other questions that we don't get to, will you write them down for us? Make sure and we want the questions to be heard.
Brian Whelan's the name, Direct Democracy Ireland. Just have a few small comments, no real questions. I'll just say that Lord Acton, a British aristocrat, said in the 1800s that the issue that has passed down through the centuries and will have to be fought sooner or later is the people versus the banks. I believe we're about to face down this monster within the next few years. There's three things I would propose. Number one is we need a public banking system which serves the needs of the many, not the few. The second thing I would suggest is we need direct democracy in this country, or some system that works on the same principles. And thirdly, power needs to be devolved back to the community. Yeah. And with those three acting together, they act like a voice, and they ensure the sovereignty of the people. The Irish people's sovereignty is being eroded on a daily basis. And that's about all from me. Just the conference was great, very informative, one of the best I was ever at. And I'll certainly do my part to see this thing succeeds.
Thank you very much.
Thank you very much. Could I just comment briefly, because you quoted Lord Acton. Thank you for that quote. I must look that up. I didn't know he also spoke on the banks, because he's of course famous for the other quote that power corrupts and absolute power corrupts absolutely. In which case, it's not surprising that he realized, how dangerous the banks are. For somebody to say that. He was, by the way, he's also famous for being the first Catholic in the UK Parliament, and also what I hadn't known for a long time is he's actually half German, because his mother was the Bavarian princess, and he's buried in Bavaria, in Tegernsee. I've seen his grave there. So anyway, he seems to have some profound insights in those days, and certainly the corruption that comes with power is a very strong argument for decentralization. That's the only way we can go forward, I think.
I think this conversation is getting to the root of it. I've come to realize over my life that an economy is nothing more than a belief system. However, I didn't know it was written by the Brothers Grimm. And shocking. The other quote that really needs to be mentioned today is not that money is the root of all evil, it's the pursuit of money is the root of all evil. Yeah. And we are 100% in that. Wrote a couple of bits on my hand. The tradition in Ireland of social finance, it's strong, as was alluded to already by the credit union representative here. We had Irish Nationwide Building Society, we had Permanent Building Society, all flogged off. Why? Because we all got greedy. We were all members and we were offered cash. So fundamentally and democratically the responsibility actually rests with our predecessors. But we need to be cognizant of that and conscious of it. One of the reasons we found it easy to do that was a lack of education. Our education system is abysmal. It is in fact an academic contest system rather than an education system. In fact, in the last year I've only become familiar with Article 6.1 of the Constitution, which guarantees the final right of appeal on anything to the people of Ireland. However, the Constitution goes on to further frustrate that in not giving us a direct way to engage in that. Accountability. Richard, you said accountability, and we've heard the central bank is unaccountable, and we've heard Mario Draghi and the ECB is unaccountable. How can this be, and how can we challenge it? Because if we are to succeed with the social banking models that are being suggested, we need to A, educate our people to what their actual rights are, not what they've been brainwashed into believing they are, and hold the people who have been doing the brainwashing accountable. And the third and most abysmal question on this, and this is not a direct to Diarmuid, who books the trend, where is the fifth estate? Why are they not representing this? There's a big question. Have they been bought?
Of course. And so on.
Thank you very much.
Sorry, Richard, if I may, just one, like credit unions, I thought it was a very good point made there from a member of the audience in relation to credit unions. They were set up by social reformers, people like our own membership in the public banking group. In the 1950s in Ireland, it was the case anyway. They were set up by teachers and civil servants and whatnot. Wonderful people with a vision to extend loans to people that traditionally didn't get a loan because they didn't own property. Now I'm just wondering, the credit unions, because they're owned by their members, and we have a situation today where we were actually trying to encourage the credit unions to engage with this debate today, and I don't think they have. I mean, there may be some other people here from the credit unions, but we haven't seen any engagement from them. The Irish credit unions are, it looks like they're in the process of possibly setting up a regulated entity. Now, it's being done though from a top-down process where consultants are brought in, they talk to the central bank, they will make a lot of assumptions and then go back to the members and ask the members to ratify those. But within the credit unions, the members are the owners. And should they be activated or mobilised, or is there something could be done to, because they are actually, the membership is the actual adult population virtually of the country. Thank you.
Yeah. I think it's a good idea. I think they should be, the membership should be activated and mobilised and informed. One should also look at what could be done to, if that's, whether it's a way forward to grow credit unions into community banks. In the UK, it turned out to be not a very good way forward for various reasons, and because basically their credit unions have been kept, as you may know, much smaller, with not a good reputation, unfortunately, and they've been kept down by legislation for a long time, and they can still not lend to companies in a normal way. So it's mainly individual loans, so they can't serve as a business lender on a normal scale. And therefore we've decided for the UK it's better to set up community banks, which then can work with the credit unions, because in the UK they need a bank, even to do their business they need to work with a bank. So the community banks can be those banks, and they can help the credit unions improve their offerings and perhaps make them more attractive at the same time. I think it can be very complementary. But it may be possible that things are different in Ireland, where the credit unions are definitely much larger than in the UK, where they're tiny. And perhaps one can even turn some into community banks, if the members are interested in this or can be motivated in this. Yeah.
Thanks.
Just a point on that. Most of last year we were engaging a little bit with the department that had got the concept paper from the German Sparkassen Foundation consultants, and they got it for free. Now, the reality is that there was a basic concept there which could have been delivered upon for peanuts. They effectively whitewashed that. But since January, since they have put their head on the block and told us to get lost, basically, we've had to take this on. And the reality is that we have a fantastic post office network with 1,100 offices, a fantastic computer network, state of the art. We have endless credit unions, and we need to just bang our heads together and make it happen. But this is not an exclusive enterprise by Joe or me or anybody else. We want people to engage. We want people to bang their heads together and make it happen. It takes a bit of work, and it takes the commitment of many others than just a couple of dozen of us that are active in the banking forum. So But those elements are there, and we've understood that from the beginning, that we need to use what we have. There's no point in trying to play the ball that's in the next field. Play the ball that's at our feet, and the post office network is not to be ignored. I'm not saying it's the total solution, but it's part of the design feature, in my opinion, and so are the credit unions, but they have to want to get involved. We can't make them get involved. Gerry.
Just a couple of questions for Richard. Regarding the bank licence, what sort of obstacles are you meeting in trying to obtain the bank licence? And access to the clearing system, does that come with the banking licence, or can you have access without having the banking licence?
Yes, two very good points. Actually, I should look into, and we should talk about how hard it is to get an Irish banking licence, because that, if that's not so hard, I don't know, then, because we are looking at alternative routes while we're pursuing the authorization from the Bank of England, the Prudential Regulatory Authority, and the FCA, under the guise of facilitating the creation of new banks. They've created a massive process to get a banking license, and at every stage there are, possibilities to slow and delay and so on. So it's definitely a massive process, but we're pursuing that, and we are hopeful on the UK front, because we'll meet the formal criteria. We want to make it very hard for them to come up with reasons why they can't give us a banking authorization. But at the same time, we are also pursuing alternatives, and the main alternative is to get a European banking license in any EU, in fact EEA country, which then can be passported into the UK. And of course the same is true for Ireland. So one has to find a location, a country where maybe it's easier to get a bank authorization, to found a bank there, and you need to have a certain small-scale operation in that country, but you can then operate in any other EU country. There's just a notification process. Effectively, they can't then stop you coming back into the UK or Ireland in that case. So we are pursuing that as well, alternative routes. Particularly the German route, where we have support of the association, well, the Sparkassen as well, but practical support from the cooperative banks and their legal departments, where they've founded banks recently, and they're helping us with that. But you can see that even in Germany, that it's become a bit harder compared to just 3-4 years ago. So one has to keep one's eyes open and look at all the options in the EU. Oh yes, sorry. And the other question was the clearing system, a very important one. That continues to be, as I mentioned in my presentation, the cartel of the clearing banks, and you have to get one of them. At least in the beginning. I think in the medium and long run, one can then look at alternatives, how to settle this, and this could involve, a new credit system. But in the beginning, it's probably sensible to go with them so that people see, your customers see, yes, you can do what a bank can do, we can do the transactions. But that shouldn't stop us then from setting up alternative systems of settling, and that could be also cryptocurrencies, distributed ledger. Yeah.
Richard, there's just one last question here. Donach Killilea, he's a councillor from Galway, I think the son of the MEP, Mark Killilea. He's asked, he had to go, he apologised into the word, but he's asked who polices the central bank, and is Credit Agricole a similar model? So I think is there something about Credit Agricole that we should know?
It is one of the cooperative banks that, there's been this cooperative movement around 200 years ago. Actually, the first cooperative was created in the UK, somewhere up north, in 1850, I think, and then soon after, or perhaps a bit earlier, 1820, 1830, and then soon after, from the 1850s, this was used a lot in Germany to set up cooperative banks. and then it took off really quickly. There were thousands and thousands of, I think cooperative banks at the peak, there were probably 50,000 in Germany. Well, Germany was a bit bigger then as well, but anyway, there's loads of them. And that movement spread, so then Austria, Italy, France introduced credit unions, and Agricole is the Raiffeisen equivalent. This is more agricultural cooperative banks. So it was similar to the German the cooperative banks. However, in France, I think also in some other countries, they started to change the formula and they became centralized. So clearly Agricole has been centralized. In Austria also, I can't remember which one, but I think it's the Volksbank and People's Bank, cooperative banks, they became centralized. And you can see that whenever they start the centralization, then that's the beginning of the end. It's not the same anymore. It becomes like a big bank. And therefore one has to keep the key ingredients in mind. So decentralization, local decision-making, independent legal entities, small scale, restriction of the activity to the local area, no lending outside the local area, and the not-for-profit orientation. You have those in place. In Spain, there used to be Sparkassen-type, German savings bank-type savings banks, the Caja, but they blew up spectacularly. And they only changed one part of that formula. They said, and in fact they were told, of course, by the economist, that's restrictive. Why are you lending only in your local area? You should be able to lend in the whole of Spain, anywhere. And so they did that, and then things got out of hand. They lent property left, right, and center in places they had no idea. This property, boom, killed them, and so you blew up this savings bank system.
Do you plan to have several banks under the one license?
No, I mean there's one bank, one license, but one could have branches. But we're essentially pursuing two licenses at the same time in the UK and then an EU license. So if things go well, we end up with two banks. But at least there should be one, we hope.
Now, we're going to wrap this up. If there are further questions that people want answered, make sure you write them down and get them to us. I think in this room there is the energy to redefine our genuine sovereignty. We need commitment across the country to make this happen. We have a serious homelessness problem, and we have a serious housing crisis. And I'm going to study a bit more what Richard has been telling us today, because I absolutely believe that in the absence of anything else being proposed at the moment, there is a very simple and straightforward solution that could be deployed through a public banking model almost overnight. Now, they could spend nights in the Dáil putting NAMA into place and putting the bank guarantee into place, so they can do this as well if they want to. There's absolutely no reason on earth why people should be being put out of their homes while venture funds are being facilitated. I think the whole system was explained here to us very, very well as to the con job that has been foisted on the public for too bloody long. And it's time we got the bit between our teeth and did something about it. Thank you.